Hi everybody, Shane Carlisle for L&I Trade House on the 15th of the 10th at 20 to 1 in the afternoon. So I'm going to start building a catalogue of information within my Discord. We're going to be going through the patterns we use, the confirmations we use, how we enter the trades, when we exit the trades. I'm going to absolutely break everything down so everybody's got something. If they're not quite sure on, there's going to be a 20-30 minute video there for you to look at, and it's just solely going to be about that process. So you're not wasting your time skipping forward to try and find this process, that process within a large video. I'm just going to create short, sweet, to the point videos, go over a couple of pairs, show you what I'm talking about, so then you can implement that onto yours. And I'll obviously talk you through what I'm seeing as I'm doing it. But my main thing was to just get moving. I've spent this past week, I've not been really well at the beginning of the week. I've been busy at the end of the week, so I've not really had time to jump in and do anything. But I've woke up today feeling really good. Helped out in the morning, got what I needed to do, got a couple of hours spare now before I need to see my sister. So I jumped straight on, got to turn the camera on, let's go. So basically, smart money concepts. There's two patterns. I've got, it's getting serious when you're reading from notes. There's two patterns in the smart money concept, bankers, institutional trading, whatever you want to call it. We trade smart money concepts. It's been proven over time and time again that the smart money concepts give you the higher risk reward. Yes, you could be waiting unless you're scalping the bankers, but isn't it worth the wait? Anyway, I'd like to be in a position where I can just put a trade on and wait 3-4 months, comfortably know it's going to come in, no stress, no hassle. That's where I'd like to be in the next couple of years, where it just literally makes me money for the sake of making me money. But the two patterns, we have a signature pattern and a banker's box. Okay, I'm probably best putting that down here. So we've got a signature pattern and a banker's box. I'm not going to go too wild into them two patterns, because we're going to break them down, and that's what this first video is about. We're just going to break everything down from your first confirmation. So today is solely bankers candles today. Heading will be bankers candles. I just thought I'd do a little intro at the beginning of this very first video, just to make you aware of what's coming. We all know of this thing called time, but it's how we use it. Now, I want to create something now that is going to help people in the future, So the skills that I've understood and I've learned, people can learn these skills through me. That's the whole point of learning a skill, is to share a skill. So today is going to be bankers candles. We're going to be higher time frames, so you see what I'm on about. Just so you can visually see what I see and what I learned. We did the best part of 50 bankers candles trades when we first set out. 50 of the next, 50 of the next. It's called discipline and focus, guys. It's not going to jump up and bite you on the arse and, hi, I'm here. You've got to look for it. You've got to know what you're looking for. You could be looking at them all day, but if you don't know what you're looking for, then what's the point in looking? You're watching them move. Yes, I understand that. And if you get to a point where you know where they're moving and why they're moving, then you're going to become an unstoppable force in the markets, I promise you. But anyway, bankers candles, institutional candles, whatever you want to call them. Today's video is going to be about bankers candles, higher time frame bankers candles. Okay, so if we go, hang on a minute. There you go. There you are. So if we jump through, and let's start from the bottom, because these are already marked up, these. So we'll CAD JPY. and remove drawings. Higher time frame. Let's go to the 4 hour. Okay, now this is, let me get rid of these sessions. You don't need to see them. Okay, so a banker's candle is classed as the last up, before down. That breaks structure. Okay. Okay. Let's just get a little thing here so you can. I don't know. Yeah, it's close enough. So that'll do. Institutional candle. Okay. And then so the last down, we could turn that red, turn that green. Same with this. You get the gist. Okay, last down before and up, which is that red there. That's that green there. This is the last up before the down that broke the structure. So that becomes a bank move. Okay, so that is a 4 hour banker's candle. Okay, it's not quite engulfed, but I'll show you one of them in a minute. Okay, so that we know through back testing and so many years of people trading this way and looking this way. Look, there's an engulfing one there because the sellers have completely engulfed the buyers. But we'll get into that. That's powerful, that. But this is just what I want you to look at now. Okay, so we're looking at bankers candles from the beginning. So that's a 4 hour, just put 4 bankers candle. Let's go big. 4 bankers candle. Okay, so that's a 4 hour bankers candle because before the last up, before the down that broke, you know, it broke this structure here, but no, it didn't sat on that structure, but it broke all that behind it, you know, from that point there where the last structure bounced. Don't forget, we're in the 4 hour. So that was 8 hours of trading that. So that's, well, there's 12 hours of trading at that price. We've got a couple of wicks, but nothing broke it. And then this came through and stormed it. So that is what you'd call a bank move. You got a line on that structure there. That candle broke it. So that leg of sellers was broke by this candle. The last up before the down. Okay. Vice versa the other way. We've had structure formed. Let's pull this down. So, okay. So we've had structure formed. It literally broke out at the bottom, but then it broke all that structure there. You see that structure, touch, 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 touch. That candle broke all that structure, that leg there. So that would be your bank move, because it's the last down before an up move that breaks structure. Okay. And we've just took back a bank move here. See how there's two engulfing bank moves there? So that's two pushes by the banks there. Let me get me. Okay, so we've had the structure formed there. Been at that price a couple of times and stayed there. We've touched, bank move here. That's a lovely 4-hour engulfing, but it just blasted straight out the bottom of that. You know, and this is the game of probabilities. You know, there's a bank move here, but it'd actually be that one, because that leg broke the structure. Did they come back? Should have been that candle. Well, that's exactly what they came for, that move. Because that broke, they'd have faked out by putting a big bank move there to then come back and get that one. To the point. No, it's bounced off. So it's just knowing that was your structure. Again, that leg broke it, so you'd have picked that, probably that little doji there. I'd have gone for that, because there's a lot more action in them two candles than there is in that. But it's a very long time to wait that. You know, it's broke away there. You've seen it break away. Put your position on. By the time it's tagged you in, it's like 35 days. You know, you've probably forgot about that break within 35 days. But it give you best part 215 points. Just knowing that that was going to happen. And then you've had the breaker structure again, candle. They've just not quite come back for it before shooting off 200 points again. You know, there's moves all the time in every time frame. It all depends on what you want to trade and how fast you want to trade. But for learning about the two patterns, you need to know when the patterns occur and at what areas, you know. So the best way to find a banker's candle is the higher time frames. Just find where it completely turns around like that. Stick a line on it. That's a beautiful engulfing setup. Look at the size of that candle against them reds. You know, so I'd group them two together, because it's touch there, touch there, touch, touch. You know, I've got the whole touch point. They've broke up. Probably just mitigating something from here. But if we went back, we'd actually find it, what broke. That was the structure. It popped out there. So what we got? Actually sat on a bank move that pushed away. You know, but again, ruling is the last That's your bank move, but they came back. So what you'd do, you'd wait, you'd see that happen, you'd see the break, you'd apply your position, you go to previous highs with your position, cover the wick of the red, go to your previous highs. You know, you've took 4% out. Yes, it's in the 4 hour, but this is training your eyes to see bankers candles. Okay, so you've had, by the time you're in and out, it's took you 20 days. But that same pattern is in the 5 minute, in the 15 minute, in the 1 hour, you know, but in the 4 hour view, showing you the power of it, you know. So we only ever trade with the trend, but what I just want you to do, we're not going into trading or anything like that. We're going into just seeing bankers candles. Okay, so find some structure, get rid of that, so your eyes aren't looking at lines. Okay, so it's clearly turned around there. Okay, so that would have been the leg that broke it. Okay, there's an engulfing setup there because the greens took over the red. But then you've come up here, you know, came back and retested the area, blasted off. And I bet you if you were to look at what session that was within London and New York, no noise through Tokyo, London, New York, no noise, London, New York. But last up, 4 hour, last up, last down before the up would be that one. Because it's the last down that broke before the up. Sorry, there, last down before the up, and it broke. So you get your line, you put your line on that candle at the top. Just missed it there before you took off the rest of the after. You know, if you'd have padded that, well, that would have been a big move. And this is what I mean. These big moves happen. You know, covered your candle already at 7%. And this is just from a banker's candle, don't forget. You know, 33% gains on your money there, guys. It still went. You know, and that's not any fakery, any hidden. You know, it's a banker's candle, 42% gains, 30 pip stop loss, 3 pip pad. We go 34, say 36. She padded it to get it. Like, they don't happen very, very often at this caliber, you know, and that's a very long trade to be sat in to get that. You know, from it breaking to you placing your trade, it tagged you in 10 days later, but then to get that, you'd have to be in it 60 days. You know, and in the 5 minute, you can churn them sort of numbers out within an hour and a half. But to understand it and the power of it, the 4 hour is, I'd say it's paramount, really, because the moves, it's 8 hours of trading. So it's such a powerful move if it's a bank move at that time, in that time frame. You know, I'm not saying that they're any less powerful in lower time frames, but you get the gist that there's more volume in an 8 hour candle than there is in a 5 minute candle. So if you can understand it in the 4 hour and how they work to then just drop down a couple of time frames like we do in the at 7 o'clock in the morning. Your eyes are going to be seeing these bankers candles and the fib zones, and you know you're going to have all these extra confirmations that make you make an amazing trade every day. But yeah, last down before the up, and it broke the leg before it, which give them a clear. You see how it come down, but it didn't break. Yeah, you broke there, but then you've had two bank moves that have pushed it again that broke the lower. They didn't break there, so they were going to carry on. They didn't break there, so they were going to carry on. They broke, but then they broke again. Just left that candle behind. They pushed away, flagged back, took that back, had a little rejection off that candle, dropped it to take that, and then took it because they played everything that they needed to make that move. Okay, so from there, that broke it. So that will be your candle. See, so it's opening areas up below the price. And if you can't find any low that they need to go, that's been mitigated. That hasn't. But again, they mitigated, took off and broke. So that now becomes your bank move. Well, that actually, if you want to, but that was the last down before the break, so I'd class that with the amount of volume that's inside that, the amount of sellers that are in there to that, but that is your engulfing, but you're around that area anyway, and you're going to cover that bottom move anyway. I'd possibly cover that. With us being in the higher, I'd possibly cover that. And I know they've got to take a dive for it at some point, but right now, we've had a correction there. We're still at true price. Tried to break, sellers have pushed back. Flag down to get this. Pushed back to get this. Sank it back down to clear that out and then took off again. Even another one there. Just from a banker's candle. Cover your wick. Even to your previous highs there. You've got 6% to where it finished. 11%. This is just from 4-hour bankers candles, but it's having the patience, guys. This is where a lot of people struggle. I struggled for a long time, needed to be in the markets, doing everything all the time so I can get better at it. But it's not that needs to get better, it's your mind, what you live around, what you're becoming, all that bit is so much more important than you trading, because we're paid to put lines on and wait. That's the top and bottom of it. Once your eyes are trained, last up before a down. So what's that? It's a banker's candle. There, 4-hour banker's candle right there. Last up before the down that broke. Okay. Just about, come back. If you're only going to previous lows, you'd have got it. Ultimately, the banks pushed it above to clear everybody out and then drop the market. Had a show of hand here. they've come across, you've mitigated, you've waited for it to create structure, it's broke structure again, it's give you a candle. Again, you'd have had to pad last up before the down that broke it. Came back, that one. Put it on the line. Cover your top wick, previous lows. Add 3 for your pad. 42. Then 46. But again, that went for 10%. Because we've had the mitigation and we waited patiently. It took off. We don't care. It can take off. I want to see this. That leg there has broke that. It's broke everything. So this is a 4-hour bankers candle that got mitigated, and then it came and blasted out, but it didn't matter because we weren't. I mean, if you was just doing bankers candles, that'd have been, if you'd got a 1-to-1, you'd have got a 1-to-1 out of that. Sell, if we're teaching 1-to-1, I'd like everybody to be going for 1-to-2 really, because then you're going to get in front of your. So we got 3.4. Right, it did give 2% from that 4-hour bankers candle, so you'd have got 2% out of it if we're going 1-to-2. But then ultimately it blew out the back. We waited for the hand to be shown. Okay, so you took 2%. You're lovely. We've got structure formed. We had a big sell-off to break that structure, which gives us that candle. I'll teach you about padding, because I always like to pad my entries. So obviously most of you know about spread and how it can go through with a wick but not buy you in, sort of thing. But I always like to pad by a couple of pips for this exact reason, because I think they are wising up in some cases. If I'd have gone straight off the body, I'd have missed that trade, because they saw all the orders that were sat there. But if I'd padded it on my entry by about 3 pips, I'd have caught that for a 1-to-10. Down to a previous lows, 1-to-10. Then we wait again. We've had a bank move left behind. Let's get rid of that. Get rid of that. Right, so imbalance, took the imbalance back, left the move, not been touched yet, okay? Let's have a look. Came back, we got, see how they come down, flagged all the way back up, came up, come back down, just missed that. They come back, took that bank move, dropped, cleared that bank move out, dropped again to take some of that imbalance. We've still got a 4-hour down here. Broke, never came back, just flagged up to get this one that it left the other day. July, sorry. Mitigated, broke, went to a new price, came back for that, gone sideways, last up before the down. That's the new bank move. Didn't quite come back. See how close it is. Been up, broke structure. Not broke the wick, but actually broke the. We're sat at the price, but we're selling. So I'm only looking to sell off. I think we're selling. Just a correction that. So, see, it's a buyer's market until this breaks. To me, that's just going sideways. It's created a higher, but then it's created a lower, a higher low. We could possibly see a higher high. And then there's either, because there's moves all the way down here. You know, and this was October 21. But as you can see, the moves happen, they can happen in one direction. That was 2022 March 9th till the 30th. You know, again, boom. So there's no saying they can't do that the other way. Always got to be cleaning up. And it's just the way they do it. Bankers candles, powerful, very, very powerful. I just want you to go along, find a place where it sits and then completely turns the other way. Get a line. Which one broke it? So it's this leg. Okay. So you'd be looking, that would be your last up. No, that would be your last up before the down. Big bank move, big engulfing bank move, because the reds have took over the greens completely. Flag back, cleared it out. Come back for us imbalance. You know, bank move, didn't break. Just cleared the imbalance back. Came down, sat at that price, and then dropped out. Bank move. That broke through. You know, you'd possibly covered that. Caught that. And then it dropped. You know, got your previous lows. Again, that leg broke the structure. Game of patience, guys. Candle closed. Right, we've broke. I'm following it back. I'm finding my last up before my down. Last up before the down. And this is where the padding comes in. You know, you pad that by 3. Get all your numbers in correct as it is. Cover your wick. Your previous lows. You know, if it's already been there, that'd be your previous lows. You know, you get 9%, 21 points. Not too bad. But you'd have to pad. So you go 24. You know, you got 7%. Just wanting you to see the power of a banker's candle. Okay. Don't need all these lines on. Last down before the up would have been that little doji. 4 hours. Came back. Would have knocked you out. But they just came back for that instead. So that was the first push. You know, they come back by to the point to get that, and that's what caused that rejection. Because that broke all that. All the way up, flag back down, flag, big push down to cover that. Rejection, came back, collected, rejection, came back, collected, and took off. So they pumped it 3 times there and then took it. Flag back, wicked into the bottom of that candle, possibly. No, it's not quite come down for that one. Again, took off, broke, last up, before the down, there, that. And the next took off again. So it's left us another move behind. That move's been taken back, but that one hasn't. Last up, last down before the up, the red. Okay, so there's what we got here. 4. Well, we're not even going to go down into any lower time frames. Don't need to. Just to show you. That. Okay. What I'll do, when I've loaded up, I'll snip it engulfing ways of each candle, so you can see. I'll get it so they're the only 2 candles you can see, and I'll snip it off. So yeah, what I'll do, I'll upload what we're doing, what I've just done there. Higher time frame, guys. Just while your eyes are being trained. Obviously, we'll stick with doing a little 1% in the morning. It keeps everybody ramped up and good. But the ideas of these videos is to now start consistently training your eyes. You're all having a little bit of fun on your FTMO trials, which is really nice to see. You're getting comfortable with drawdown limits and trading within guidelines, which is really nice to see. There's been some really good wins recently. Nick's done really well. Nick Fledger, Nick Roberts is doing really well. Zach's doing really well. Mark's doing really well. Sam's doing really well. Scott's getting his head stuck in. Everybody's pushing forward. It's really nice to see. Manda's here and there. Kerry's having a nice. Well, Kerry's living my ultimate dream life. So, absolutely blessings to you, Kerry. But yeah, we're all moving forward. Everybody's at different parts of your journey. So don't feel begrudged because obviously someone's a little bit further on than you are. Someone's having a little bit more success than you are. That doesn't matter. The only thing that matters is that you keep growing and you keep going. You don't have to do it every single day. It'll get to the point where you don't want to do it every single day because that's the whole point of this, to gain your time back. When you see the power of the institutional candles, the bankers candles, the confirmations that we're going to be putting together over these next couple of weeks, you're going to be picking some of the most hottest trades that you've ever picked in your life, and understanding the price action flow and how it moves, which most of you are doing, because you get involved, you're looking, you're seeing you're seeing it move. You can't not see it move. It's just knowing where it's going to move and how it's going to get there. And this is what I'm here to teach you, the patterns that they use to move that money to get it there. No move in the market is random. Everything's pushed by news and world influence. So it's probably not always check your eco calendar, guys. My effects book, economic calendar, every morning. You make an account, you can dull out all the green and yellow noise and just get all the red letter news, which will just give you a massive impact in news. So if your trading time, you're near a bank move, you've got high impact news, more than likely is they're going to use that news to bump to that bank move, you know. But it's doing all these little steps every single day that's going to make you understand smart money concepts. So yeah, lesson 1: bankers candles, institutional candles, whatever you want to call them. The video's here for you guys. Get in the 4 hour, you know, mark them up, follow them, see where they mitigated, see what sort of percentage through position to risk to reward, you know, and just start building belief in yourself that what you're looking for is there. It's in front of you. It's just opening your eyes and zooming in on what needs to be looked at rather than what's there to be looked at, if that makes sense. You know, there's people can spin you a lot of, there's trends, there's channeling tunnels, there's double tops, it's a lot of bollocks. There's just price action moving with an artificial intelligent robot algorithm that likes balance, you know, and once the market creates imbalance, then we jump on that opportunity because it has to come back to create balance. And that's where we sit waiting for it to come back to correct its balance. And that's probably the best way for me to explain it, if I'm honest. But yeah, week 1, bankers candles in the 4 hour, looking for nothing else. I'll put some snippets of engulfing ones, which are more powerful, but for the moment, the last up before the down. On your up candle, it's the bottom of the body where the candle opened. On the down, it's the top of the red because that's where the candle opened, where they first pushed price. Last down before the up that broke, or the last up before the down that broke. Okay, guys, I'll get this uploaded now so you can all start looking for high volume bankers candles. Okay, peace and love, everybody. Speak to you on the next one.